Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 24, 2025, and we're diving into Covenant Logistics Group's fourth quarter earnings report for 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Covenant Logistics has just released their Q4 2024 earnings, and there's a lot to unpack, from their diversified business model to their strategic initiatives in the logistics sector.
Revenue and profitability overview. Let's start with the top line. Covenant Logistics reported a total revenue of $277.3 million for the fourth quarter, with freight revenue excluding fuel surcharges at $251.1 million. John, how does this compare to last year?
Compared to the same quarter last year, total revenue increased by 1.2%, and freight revenue saw a 4.6% rise. This growth is primarily driven by their truckload operations, which saw a 3.5% increase in total revenue. However, it's important to note that their operating income decreased to $8.6 million from $14.3 million last year, indicating some pressure on profitability.
And what about their adjusted earnings per share?
The adjusted EPS came in at 49, which aligns with the forecasted EPS of 49 cents. This shows that Covenant Logistics managed to meet expectations despite the challenging freight environment.
Segment performance and strategic initiatives. John, can you break down the performance across Covenant's different segments?
Sure, the dedicated segment saw a significant 22.4% increase in freight revenue, driven by a 13.2% increase in average total tractors. However, the expedited segment experienced a slight 0.8% decrease in revenue. On the brighter side, the managed freight segment improved its operating income by 87%, thanks to effective cost control and capitalizing on peak opportunities. The warehousing segment saw a minor 0.8% decrease in revenue, but managed to increase its operating income due to better labor cost management.
It seems like Covenant's diversified business model is playing a crucial role here.
Absolutely. Their asset-light segments, like managed freight and warehousing, have outperformed expectations, providing a buffer against the challenges faced in their asset-based segments.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Covenant reported an operating ratio of 96.9% and an adjusted operating ratio of 92.9%. What does this tell us?
The operating ratio indicates the company's efficiency in managing its operating expenses relative to its revenue. While the adjusted operating ratio remains stable at 92.9%, the GAAP operating ratio has increased, suggesting some cost pressures. However, Covenant has been proactive in managing these through strategic cost control measures.
And what about their future outlook and capital expenditures?
Looking ahead, Covenant plans to allocate $70 million to $80 million for capital expenditures in 2025, focusing on growing their dedicated fleet and maintaining the average age of their equipment. This strategic investment is expected to enhance operational uptime and reduce maintenance costs, positioning them well for future growth.
CFO insights. John, what insights did the company's leadership provide in this report?
CEO David R. Parker emphasized the positive impact of their diversified business model, particularly in navigating the challenging freight environment. He also highlighted the strong performance of their asset-light segments. CFO Tripp Grant noted a decrease in net indebtedness by $28.7 million, reflecting improved financial health. The leadership is focused on expanding their dedicated fleet and capitalizing on market improvements.
It sounds like Covenant is positioning itself strategically for the future.
Indeed, they are not only managing current challenges, but also setting the stage for long-term growth and profitability.
Key takeaways. In summary, Covenant Logistics Group has delivered a solid performance in Q4 2024, with a total revenue of $277.3 million and an adjusted EPS of 49 cents, meeting analyst expectations. Their strategic focus on expanding their dedicated fleet and managing costs positions them well for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Covenant's performance and prospects.
Thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Covenant Logistics' performance in the comments below. Until next time.